Are inflation and interest rate your friends or enemies? Let's start with interest rate. How many of you think that this immediate fall in or the correction in the market is because of the interest rate and it's going to have a long lasting impact? How many of you think that? It's a bit of question, you know. So look, to come up with the right answer, we did some research and we found that there's a 40 years old data. So this is a 40 years old data from 1980 to 2020 of three most populated cities in Australia: Melbourne, Sydney, and Brisbane. Look at the interest rate between 1980 and 1989. It was 13.2% and 12.9% in Sydney. What was the growth of property during that time? Sydney experienced 21% year-on-year growth for 9 years, even with 12.9% interest rate. When interest rate fall a little bit from 12.9 to 11.9, what happened? If the interest rate is negatively correlated with property growth, this should have gone up, right? No, the property growth has actually fallen. So what this chart tells me, two things. One is that the property prices are not 100% correlated with interest rate. Interest rate is only one of the factors which affects the property, the sentiment of the buyers and sellers in the current market and have a short-term impact. Number two, look at the Sydney property growth and Melbourne property growth over a period of 40 years. If you look at it, the Melbourne has seen the more growth in terms of more capital growth over a long period of time as compared to Sydney. The Sydney has more zigzag growth, more ups and downs. Melbourne has more stable growth. So these two information was very valuable for us when we found this data. Now, let's see as an investor how the interest rates are going to impact you. Let's say that you bought a property of $700,000. You put 20% down payment. You take a loan of $560,000. The current interest rate is 2.8. Let's say it's just an assumption right now. Interest rate is 2.8. Your rental is $520 per week. You take an interest-only loan, right? When you take an interest-only loan, you are positively cash flowed. It means this property is not only giving you the capital growth, but every week it's adding $160 in your pocket. Plus, because you are buying a property, the government also want to reward you with tax benefits. So you get a tax refund because of negative gearing of approximately $2,457. This is based on assumption that you are under the tax slab of 37%. What happens when the interest rate goes up? Let's say the interest rate goes from 2.8 to 3.8%. What happens? You pass some of that cost to your tenant. So increase the rent from $520 to $540. Now, because you pass some of the cost, but also you know that that 3.8% can be managed if you take an interest-only loan, you're still positively cash flowed. But look at the other figure. Because you're paying higher interest rate, the government is taking that into account, and you actually getting a better tax refund. You're getting almost $1,700 more at the end of the year. If the interest rate goes further up, which is still right now the interest rate is around 3.5 if I remember correctly, but let's say the interest rate go all the way to 4.5. You pass some of the cost to the tenant. You increase your rent from 540 to 560. You're still positively cash flowed. But look at what government is doing at the end of the year. Government is giving you almost $1,100 more as compared to 3.80% interest rate. So as an investor, you know that you don't have to worry if you invest smartly, and if you know that the interest rate is not your enemy, but if you own an asset, interest rate can work in your favor. So what we know now, that lower the interest rate, the families come into the play, the first home buyers come into the play, owners occupiers come into the play, and they buy more property. But interest rate goes up, investors, come into the play, because they get a lot of advantage, not only from the government, but also because they know that they can pass on some of the cost to the homeowner, to the tenants. Now, this is not what we are saying. This has also been backed by one of the statement by one of the biggest property buyers agent. So the buyers agent said a lot of buyers now were in watch and wait pattern, and investors in particular were looking for opportunities as they think value is returning. This was published in July 23rd article in Sydney Morning Herald. And this means that not only us, many seasoned investors know that they did not need to worry about interest rate, because in long run, it's going to benefit them. They're going to not only pass on some of the cost, but governments return them a lot of tax benefits, even if the interest rate goes up. So we know that now that interest rates are not a problem. If we act smartly, if we know which side of fence we are, we can take an advantage of higher interest rate. It totally depends what side you are. Are you a rent tenant? Are you only a owner occupier, or are you also an investor? The moment you become an investor, the interest rate works in your favor to great extent. And that's why the seasoned investors are not worried about increase in interest rate. In fact, they knew that when the interest rate will come, the market will correct itself. And once the market corrects itself, it will be the right time to jump, buy the property, which not only they can leverage in terms of the future capital growth, but also because they know that the government is going to come and help them because of negative gearing and the tax benefits which government allows property owners to have in this country. Not too many countries in the world allow you to have depreciation on the property you have.
If you like the content of the videos, then please don't forget to like it and share it. For future updates, please subscribe the channel. Thank you.